Hello, and welcome back to another episode of C-Suite Unplugged. I'm your host, Adam Legg, and in this series, I talk to Alberta's top CEOs, entrepreneurs, and business leaders about their journey to the C-suite, what keeps them up at night, their perspective as a leader in their industry, and their outlook on the future. If you find this episode interesting or insightful, let us know by heading over to Apple Podcasts or Spotify and leaving us a quick review and rating. Now, on to the show. Welcome to another C-Suite Unplugged. I'm your host, Adam Legg. It's said that leadership capabilities can be applied across situations, contexts, industries, and roles. Today's guest has shaped and deployed his leadership in many different sectors, from telecommunications, retail, and financial services. He's recently completed the largest merger of credit unions in Canada, bringing together Servus and Connect First. In his current role as president and CEO of the now larger Servus Credit Union, he's taken on a big job, bridging two companies into one, and definitely not an easy task. This is his second tour, so to speak, as a BCA member, first having joined in his previous role at Alberta Central. We touch on many realities facing leaders, changes in the financial services sector, the appeal of moving from Regina to Edmonton, and he even shares tips for shopping at Costco from his time working there during university. I hope you enjoyed this conversation with Ian Burns. Well, Ian, welcome to the podcast.
Thanks, Adam. Great to be here.
Ian, one of the things that our listeners love to hear is that journey of the CEO. So we're going to get there in a second. But first, for those people that don't know Ian Burns or Servus Credit Union, tell us a little bit about Servus and the role you play there.
Well, thanks, Adam. And so we're Connect First and Servus Credit Union Limited today, post an amalgamation that we just completed on May 1st. So our legal name is Connect First Servus Credit Union Limited, and trade name to be announced at a later date. So great to be here. We are an organization that's Alberta-based. We represent the accounts of 500,000 plus Albertans. We have 3,000 employees, over 140 branches, and we're in 80 communities across the province. Today, we have over 36, almost $37 billion in assets under administration.
Oh, great.
And we are just dedicated to helping Albertans achieve their financial goals.
Wonderful. And you have the wonderful pleasure of leading that team.
I do, and it is a pleasure. We've got a fantastic team, people engaged across the province, and it's great to see the energy out there. Lots of positive things going on.
Yeah. Well, we'll talk a little bit more about credit unions, service, etc. But first, we're going to talk about you. So, one of the things people love is that story. What was on the mind of Ian? As he finished high school, he had the whole world in front of him. Where did he go? And how did he get to the path of being the president CEO of Servus?
Yeah, thanks, Adam. You can't write this stuff, so happy to share my story. I finished high school here in Calgary, grew up in the Southwest, went to Dr. E.P. Scarlett. I took an undergraduate degree in political science at U of C, and while I was doing that, I needed to work. And so I worked probably 2/3 time, 30 hours or so at Costco, and worked
that's
there
a lot of
for
time.
I worked there for the better part of 7 years. Finished my degree, and it was still a well-paying job. And so my first real business experience was there, and I got to do every job you can do inside a Costco warehouse. I sold memberships, I drove forklifts, I managed their security department.
Oh, wow.
What a great training ground as a jumping off point. When I left Costco, I just sort of lost my father suddenly and thought, geez, I have to go do something else. Thank you. Went and traveled in Europe for about 6 months and came back and started doing some political work just through contacts I had in one of the federal parties and helped plan some events. I did some research in southern Alberta for the Senate, so I wrote a paper on that. And then I started dating my wife, who was my girlfriend, of course, at the time, and she was working at TELUS. She's like, you should just, apply for TELUS. They're hiring right now. I thought, okay, that's fine. And I applied at TELUS and ended up getting a job, but the only thing they were hiring for was telemarketers. So I was hired as one of those irritating telemarketers, and I would call people on the phone and try to sell them phone services.
Yeah.
And so I did this for a few months, and I thought, this is crazy. This is the way they're paying us for doing this. They're actually losing money. And so I sent a letter to the vice president of our marketing area and said, you're paying us for all the wrong things. We're repricing your market. You shouldn't do these. And so he met with me, and I spent some time managing in that area, but ultimately within less than a year ended up in the marketing area, winning a job setting all the sales targets for the consumer division of TELUS and working in the channel management group. So spent better part of 7 years working for TELUS as well. Had a young family, got married, and was traveling back and forth through lots of these corporate reorgs that go on with these larger organizations. And I met a gentleman on a plane while flying from Vancouver to Calgary and talked to him for about 20 minutes as we were landing, handed me his business card and said, I think I have a job for you.
Really?
Okay.
Oh, wow.
Well, that's interesting. And And the company was Kiewit's, Credit Union Electronic Transaction Services, and it was a MasterCard provider to the credit union system. And I had never heard of them. And
Nor have I.
Nor have you. And we were landing in Calgary. I said, well, you're based in Calgary. He said, no, I'm based in Regina, of all places. And so I took his card, assuming I would never see him again.
Yeah.
And arrived home that night. And my wife had just come back from a trip with my sister and her mother. And she walked in the door and said, I got to get out of here. We got to go move somewhere else. And I jokingly said, yeah, we have an opportunity if we want to do this. And so we joked about it, and we didn't have an intention to go, but we actually made a list of all the things it would take for us to move our family. And all those conditions were met. So we picked up and did the opposite of what people do. We moved from Alberta to Saskatchewan and spent the better part of 3 years there. I took my MBA when I was there, and I ended up supporting a team that worked with 334 credit unions across the country, really helped integrate their credit card business, helped them grow their business. So I got to travel extensively, and I got to go into over 200 different credit unions across the country. Wow. It's really where I fell in love with credit unions and the difference that they make. And one of the things that I will encourage your listeners to do, if you haven't been into a credit union, go in. And if you go in, it'll feel differently. You'll feel something different than you feel going into any other type of financial institution. So from there, I ended up getting a job running financial services for the BRIC, and we were looking to get back to Alberta. So we moved to Edmonton, and like any good Calgarian growing up, you're not necessarily in love with moving to Edmonton. But as my wife said, almost 3 years in Regina, Edmonton starts to look pretty good. So we ended up, for the better part of 6 years in Edmonton. So I ran financial services for the BRIC Group Limited, publicly traded company at the time, was there during some very tough times within the organization, was asked to move to Toronto when it was acquired by Leon's, looking really to keep my family in Alberta, but had no real plan to do so. I ended up getting recruited, and we were getting called at home from somebody who didn't have my work number and didn't have an email address for me, from an old resume from a job I'd applied for a long time ago. Oh. My wife said, would you call this recruiter back? And I'm like, okay, I'll call them back because they're bothering her at home. And I said, you must have the wrong number. It was a recruiter looking for a CEO of running the Alberta Real Estate Association, the trade association for, at that time, the over 5,000 real estate agents in the province. And I said, well, I know very little about real estate, and I don't think I'm your person. They insisted on meeting with me, and that turned into a very interesting opportunity to help support the team and help support realtors in the Alberta community. Did lots of great things while we were there. We were very active, obviously, in lobbying the government on behalf of realtors, and we had very good success in that regard. We started a lending company to help realtors who were challenged in the time between they sold a house and when they achieved their commission, so we were able to help them with that. Look at different ways of bringing in revenue as well, including a cell phone program managed that has several thousand realtors that are using it today. So it's a revenue stream and a cost savings for realtors. So lots of good experience there. And that led me to my next role with Alberta Central. And Alberta Central had owned this company, Kiewit's, that I was just talking about. They were one of the two owners of it. If I hadn't known that, I probably wouldn't have known who Alberta Central was. But for your listeners, Alberta Central is the trade association and also central banking facility for Alberta's credit unions. Yeah. And they've been around for many, many decades. And their job is to act like a mini central bank and to stop things from going bump in the night if there's challenges around capital and liquidity in the Alberta credit union system. And also their job, of course, is to lobby the government on behalf of credit unions. So I had people call me and say, you need to apply for this job before I even knew it was available, and it was successful in that. And it was great to be back in the credit union system, great to be back to work with people who share these cooperative values and were looking to serve Albertans in a different way than the banks do. As I was in that role, one of the things that became very clear to me is, running a central bank and a trade association. Every year I would go and lobby the government, and we'd have roughly 635,000 Albertans that were members of credit unions. And the number was more or less the same every single year. And I really realized at that time that we needed more people to belong to credit unions. And the way to do that was to go and run one. And it caused me to seek out the role at Servus, now Connect for Service, that I hold today.
The Alberta Central role is where we first met and where you first became a BCA member and then brought that over to your leadership at Servus. Ian, incredible set of experience and companies and industries, some well-known Canadian icon companies and some lesser known. How did you find it making the move across different industries? Were there any common threads that you really brought from a leadership standpoint to being able to run those organizations or run those departments? Many people get into a sector and then they stay in that sector for their career. You've got a diverse portfolio, and I'd be curious to know how you found some of those moves and what was common and what was maybe not.
I think a lot is common. That's probably the short answer is there's just a lot of commonality. Your skills are more transferable than you think they are.
Mm-hmm.
Business is business. And when you're dealing with members or customers, when you're looking to provide products or services, when you're dealing with retail points of presence, there is so much that's transferable. And one of the other threads that you could draw between many of the areas that I've worked in is they're all regulated industries, whether that's
Mm, that's
telecommunications,
right.
insurance, the card business on the side of financial services, or running a central bank and now a credit union.
Yeah. And it sounds like to some degree highly customer slash public focused, with the exception maybe of the Kiewit or and the real estate association, but Brick and TELUS and Service, all very much about customer and customer service. Any insights there on how to really nail the leadership on the customer service side?
Well, I think the key is really how organizations are ultimately delivering for customers, how you're
Hmm.
creating points of differentiation, and looking for innovative ways to learn about what your customers, your members want. I have a story, a real quick one that I'll tell you from my time at TELUS. And I was at TELUS during the strike in 2005. Now, anyone who worked at TELUS at that time would know that its nickname was Jason's because it was July, August, September, October, November, the 5 months that that strike went on. And I was a marketing manager, as I was telling you, and I ended up getting deployed into the field because I checked some boxes from, being a summer student when my dad worked for Nova back in the day. So I ended up as an installer, climbing poles and splicing wire and going
Oh
into
my
the
goodness.
homes of Albertans. And I can tell you, for all the things you learn about customers and what people need and want, I learned more from going into the homes of more than 1,000 Albertans directly than I probably did doing segment marketing or product marketing or channel management when I was at TELUS.
Interesting. Interesting. Climbing poles and doing all that stuff. Wow, that's
It was
not
interesting.
not something you'll see in your average CEO resume. That's for sure. That's great. And any tips for people who are long-term Costco shoppers? I know we are as a family with 6 people in our house, but any inside tips?
I think if it's still the same today, anything that ends in 77 for a price is a discontinued item. So look for those.
Ah,
They obviously rotate their products quite quickly. So look for those things. But it's an incredibly fascinating business. If you think
mm,
of how Costco works, they sell membership and they ideally try to use the membership dollars to offset the operating expenses of an individual warehouse. So they have throughput on products and they make a significant amount of money by buying products under terms that they get to determine because they're such an incredibly large buyer. And they don't have to pay for those things for 60, 90, 120 days, and they blow through a pallet of whatever it is at Costco on the weekend when you and your friends go to
exactly.
shop there.
Exactly. Yeah.
So I would say, look for deals. At that time, the average Costco shopper cart was about $350. I'll bet you it's double that now. So if you're going in there for a large can of mayonnaise or bread or whatever else it is, I think the trick for all of us is when you get to the end till you usually have much more.
I was gonna say from those occasions where I think I'm going for a large can of mayonnaise, I come out with an entire cart full of stuff.
That's right.
Right. So much is happening in the world these days in the corporate sector. There is so much on the minds of CEOs. Maybe share with us some of the more challenging decisions that CEOs, from your experience base, are facing. What are some of the factors that you're having to weigh that are either new in these times or are sort of different versions of continual leadership issues?
Well, I think there's a constant challenge around trying to meet the needs of customers, the needs of
Hmm.
your employees, there's the economic challenges that we're dealing with currently. And it's about trying to stay in touch with what's going on inside your organization. So I think there's always a need to continue to do that. There's also the sort of internal focus challenges that you have running the organization, but more commonly now, and especially in our business, it's the macro impact of what's going on in our environment, whether it's Amazon or others trying to get
Hmm.
into the financial service business and doing so in a meaningful way, to some of our larger marquee companies in Canada, whether that's Loblaws with PC Financial Bank or
Yeah,
Rogers
yeah.
owning its own bank. We're seeing cross pollination into the financial services business, let alone fintechs and neobanks that are more entering the Alberta territory. So we have lots of competitive pressures, not only dealing with the big five banks and, of course, ATB in our market as well.
Hmm. I mean, it's a highly regulated sector, but are there barriers to entry such that some of these companies, I mean, like who would have thought that Loblaws would be getting into financial services? Are they just seeing it as so appealing and the barrier to entry for them is just worth the hurdle? Or are they lower than what people may think?
The barriers to become a financial institution aren't small, but if you are a large organization that's well capitalized, I think you can get there. In the context of credit unions, though, we don't see a lot of new credit unions. I think the last new one in Alberta was in the early 80s.
Right. Okay.
And so what we're seeing in our sector is more consolidation of credit unions
Yeah, it's the
to
other
try to
trend. Yeah.
gain scale and to maintain our ability to compete in the market. So a little bit different there, but we are seeing new banks pop up, and then some of these new entrants are not as regulated, or in fact are not regulated at all. So their barriers from a competition perspective, their cost of regulatory compliance can give them quite a competitive advantage.
Mm-hmm.
And of
Mm-hmm.
course, in many cases, they're not constrained as we are today to doing the vast majority of our business within the province of Alberta.
Yeah. You've had multiple leadership roles in your career, Ian. What would you describe as your leadership philosophy?
I think for me, it's about empowerment. I'm not a micromanager at all. I'm not a big believer in that. Really, my focus is around trying to ensure that I'm supporting my team, the entire team, to achieve their goals. I'm removing barriers, I'm kicking rocks out of the way,
Mm-hmm.
and allowing them to be as successful as they possibly can. And I think it's about empowering your team. It's about creating a culture where people can come as they are, they can bring their best selves, they can hopefully identify very strongly with the values of the organization and have a place that feels more than just a place that you go to work.
Mm-hmm.
And
Mm-hmm.
there's an element of that, I think, in our culture where we feel like family as well. And we feel like we have a higher purpose in how we're dealing with our members, and we're looking out for their best interests. We make profits. Credit unions, in fact, we're probably the most profitable credit union in the country, but we make profits and we use those profits to give back to our members and to help communities. We're
Mm-hmm.
not really driven by what many of our competitors are, and that's the bottom line, and maximizing shareholder value.
Yeah. You touched on two of what Daniel Pink calls sort of the three elements of drive and motivation: purpose, which you spoke about, autonomy, so letting people do their best work, not being a micromanager, and then third is mastery. So being able to support people as they develop their skill base. And when people feel they have those three, they've got a very strong commitment, they've got a very strong drive to be part of that organization. So it sounds like you've got that nice triangle built into the way you lead
I think we
your
do.
organizations.
And I believe that team members are ultimately responsible for their own development. Organization is there to support them, but they have to take a leading role, helping develop their mastery of their job and that continual improvement as well.
Yeah. Let's switch to credit unions. For our listeners, some may be familiar with the credit union, some may not be. So help us understand, what is the difference between a credit union and a traditional quote unquote bank? We won't name any names here, but what's the difference?
Yeah, so the difference between a credit union and a bank is several things. The first thing is that we are member owned. So we're cooperative, we're based on cooperative principles. We are financial institutions that offer a full range of financial services products, but we're owned by our members. Our members choose our board of directors, who ultimately is responsible for hiring me. We believe in democratic values, and we are very focused on our community, and we are very focused on helping Albertans thrive and achieve their financial goals and ultimately their dreams and aspirations.
Yeah. How do you find that differentiation of being member owned versus a client, so to speak? There are studies that show that, long term, those kinds of organizations perform better in a long term just because they're not as worried or pressured by markets to deal with quarterly guidance and quarterly performance, et cetera. They've got an eye to the long term, the longevity of their members' company. How does that resonate with Alberta as a market?
Well, I think it does resonate. We certainly are able to take a longer term view, also because of our size. In many cases, we have the ability to be a bit more nimble than in some cases our larger competitors as well. But the market that we play in has unique characteristics compared to other provinces in the country for sure. Because we live and work here and make all of our decisions here, we're able to really handle the cyclical nature of the Alberta economy and do lots of great things to help meet our member needs. But specifically to what makes our culture different, and your comment around being able to take a longer term view, I think that's true. And I've got some great examples of that as far as investments we've been able to make in technology. And when you go to your board and you're looking to make investments in creating a better member experience for your members that own you,
Mm-hmm.
it's not that hard a discussion if the business case is strong.
Mm-hmm.
And so I think it allows us to continue to focus on meeting our member needs in a way that is longer term focus. Absolutely.
Yeah. What would you describe as some of the realities of trying to compete as a credit union in a very highly competitive market for financial services with some very, very large entities in the country? What are some of the pros and advantages of being a credit union? What are some of the challenges that you face in contrast to the bigger organizations?
Well, I think there's both. And so some of the challenge we have would be even amongst your listeners, there may be people who don't know what a credit union is, and you ask the question. So
Mhm.
we've got over 5,000 Albertans. We've got 500,000, roughly 10% of Albertans that do business with just our credit union today. But there's still, I think, millions of Albertans who don't really understand what a credit union is. So I think we have to do a better job. We are in many ways are the best kept secret. Many of your listeners wouldn't know that we gave $68 million back from a legacy service perspective and $23 million back from a legacy Connect First perspective. So
Mm.
over $90 million back to members last year. An annual contest where we give away $1 million to one lucky member, where we tried to help build deposits. So we're able to do things in a different way than the banks. We're able to have a local focus. We also have community councils. So we have over 30 community councils all over the province where we're able to get grassroots feedback on what's happening in individual communities and give a say to members, both directly and indirectly through their regions and through whatever group they belong to help influence the future of the credit union. So those things, I think, give us, in some cases, a strategic advantage. But this is financial services, and it is in many ways a scale game. It is hard to compete with very large national banks. We think of the big five in the context of Alberta. We compete with them every day. We win business every day. It's absolutely a challenging market because we don't have the deep pockets that they have with regards to the investment. But what we do have, we're close to Albertans. We're very tight knit into communities, and we're very innovative as far as trying to find solutions for the financial needs of our members.
Let's go there because that's something sort of very germane to what you recently done at Servus, is that scale, that challenge where you've got such big financial institutions in Canada. Consolidation seems to be, and mergers seems to be a bit of a trend in the credit union sector. Maybe tell us a bit more broadly about how that has played out over the past, probably I think maybe 5 to 10 years or so. Begin to see some of that trend, and tell us a little bit about your recent merger with Servus and Connect First.
That example I gave when I worked at Kiewit, and there was 334 credit unions that we had, and there was a couple that weren't our customers. So say 350 credit unions across the country. There's 179 today.
Oh,
And
so
in the province of Alberta, for the legacy service side, I know this number, it's 133 credit unions that made up what Servus was before this last amalgamation that we went through.
Sorry, say that.
133 credit unions in Alberta alone that made up legacy service, and they don't have the Connect First number, but quite a few there as well. So if you think of literally hundreds of credit unions that existed, and one branch credit unions in many cases across this great province of ours. And so we've seen this consolidation happen over time generally for reasons of efficiency to help improve member experience. And so that's been absolutely the world that we've lived in from a credit union perspective.
So how long a period of time was it when you had the 133 to when you had Servus today?
Well, that's over 80 years. So
80,
that's
sorry?
80.
Okay. So,
Yeah,
so that's a little longer than I thought it might be. Yeah.
So it's taken time, but we're seeing consolidation in Alberta, which is actually happening faster than anywhere else in the country. We only have 12 credit unions left in the province at this point, and ours is over 80% of the assets within the Alberta credit union system in one credit union. But we all do our very best to support each other. We work through Alberta Central, and we've got a vested interest in making sure that the credit union system remains very strong and vibrant, whether you're a very small or a very large credit union. But this amalgamation that we went through that closed on May 1st is the largest in Canadian credit union history. So bringing together legacy Servus, which was about $25 billion in assets under administration, and Connect First Credit Union that had roughly $8 billion. So bringing those together was a real challenge. To get an amalgamation done in our space, you have to get boards of directors to agree that this is a good idea. You have to go through a full due diligence, a full business case. You have to have a positive vote with a 2/3 majority from each credit union. So we were successful in doing both of those things. And then you also are required to get all of the required provincial and federal regulatory approvals. We went through that entire process, and I think, with good success and with lots of positive momentum from the team coming into this transaction.
Yeah, well, congratulations on that. I know, having spoken to you many times throughout the process, how big a lift that was, not only from a member support standpoint, but just the operational side of it, the government approvals. It's no small feat. This is a feather in your cap from a leadership and career standpoint, having pulled this off, to be honest. And so kudos to you and your team for doing this. It's not a small task.
Took a village. Thanks, Adam. But the team, a very heavy lift. And for me, probably the most gratifying piece was just the number of team members I got to meet, and members generally across the province. And I've now had the opportunity to visit really, I think over 130 of our 140 branches across the province. And I visited well over 50 last year alone. And it's great to get out and meet Albertans and see what's going on in different communities. And every community is different, and the needs of Albertans vary greatly. And we're very fortunate for the passionate Albertans that we have the pleasure of earning their business.
Yeah. I sort of smiled as you were talking about some of those older one branch credit unions because when I first moved to Garrison Woods in early 2000, I can remember there was a little strip mall, and I think it had something like the South Altador Credit Union. Clearly was the single and only branch of that credit union, and you sort of think, God, there's no way something like that small could survive. And so it's no surprise this consolidation trend has happened, particularly in the ability to compete with what's happening in the financial services sector. It is all about scale in terms of being able to provide service and good rates and good value to your clients.
It is, but our roots and our beginnings are very clear. And there's some discrepancy, whether it's Mangan Credit Union, sort of based out of the Edmonton area, or Inglewood Credit Union, just down the road from us on 9th Avenue here, which is the oldest one, or which was the first one in 1938 when credit unions were formed in the province. But we started there, and we've got this rich history, and it really comes from communities coming together to help each other meet their financial goals when the banks wouldn't get it done. And so that still resonates for us today.
Yeah.
And that's the reason we're here. That's why we believe in what we're doing, and we're very excited about our future.
That's great. So May 1st, the deal was finalized. Maybe tell us about how it's going. What would you do differently knowing what you know now? If you could sort of go jump in your DeLorean and go back in time, anything you would change on the lead up to today?
I'm going to ponder that. I don't spend a lot of time thinking about what could have worked, but certainly lots of key learnings and lots of things that we're sharing with our colleagues across the country who are talking about different credit union mergers and amalgamations right now. I think from a team perspective, we did our very best to hit the ground running, but as we sort of worked through the various levels of regulatory approval, we weren't as ready as we hoped. And so solutions for members to go into what were the legacy credit union branches and do their banking, we've created the ability for them to do that today. But it's going to take us quite a while to bring all of our systems and our processes together and to really get those synergies to help the credit union ultimately become more profitable so we can do a better job and say yes to more members.
You've got one merger under your belt. Do you see the future as more of the same, or is this a bit of a merge, stabilize, run for a period of time, or is this just a continual need to kind of scale over through M&A?
We're very focused on growth. There's some McKinsey consulting work that came out in the credit union system that said in order to be sustainable over the long term, you need to be in the sort of 30 to $40 billion in assets under administration. We're in that range now, and we're going to continue to grow and to focus on the needs of Albertans. And we're very much focused on stabilization right now and focused on meeting the needs of our immediate members. But we also are very aware of the market that we work in, and we've done a few things already to help to expand our business reach outside of the province. We last year acquired a leasing company, Stride Capital. It's Calgary-based, so they are a subsidiary of our credit union now. We are one of the only credit unions that has our own credit card license, so we're a MasterCard issuer, so we have the ability to sell credit cards across the country. So we're looking at opportunities there. And under the Credit Union Act, which is our overarching legislation, we're able to do 15% of our on-balance sheet assets outside of the province. So that allows us to diversify some of our risks to make sure we're doing the best job of meeting the needs of our members outside of the province. But we'll continue to evaluate. The market is certainly shifting. I am getting calls from credit unions in BC and Saskatchewan who say, "Hey, we choose you. We'd like to merge or amalgamate with you." And I'm like, "Well, that's not how it works in the province of Alberta today. Like we can't do that." And
Pick me
it
next.
actually kind of works like we have to choose you, or our members have to choose each other. But it's a great question, and stay tuned.
Must be nice to be wanted, and people putting up their hand and say "pick me next" kind of thing. Where's the future over it broadly in the financial services sector? Do you see continued bricks and mortar, sort of real branches? Is it obviously clearly increasingly digital and technology focused? Are there more innovations to come? We hear lots about open banking in Canada. Where is the future of the sector? Where's the compass pointing?
The compass is pointing in a variety of different directions, so maybe there's a magnet up against it right now. I think that folks are trying to figure that out. There's definitely an evolution of the in-branch experience. There's been a move away from that. I think all financial institutions, including credit unions are specifically are seeing less branch traffic.
Mm.
And that was even further magnified through the pandemic, where, even folks like my in-laws who are elderly, they can now do internet banking. And I think, the majority of their friends are able to start to meet their banking needs in that way. So that was a huge shift, especially for credit unions. But I do think the future is digital. If we look at younger generations, we're finding that they're very interested in our values. They're very interested in shopping local and community focused. And what a credit union is all about really meets their needs, but they have zero appetite for things not happening in a nanosecond.
Yeah.
So,
That's
it's,
true. Which is not
the
necessarily
attention spans are not, at least for my kids, like the attention spans just aren't that long. And so you want access to your products, you want access to it instantly, you want access to the advice you need, you want it in a way that feels like the company you're doing with, but customized and specific to you. So I think generally speaking, that's where it's going. But I do believe in financial services, there will always be some need for face-to-face interaction. It doesn't mean you have to do that, but to have that as an option, especially for those larger critical purchases like buying a home or critical decisions around the future of your family and possibly for generations to come. Important discussions.
So it's part of a combination of some of that easy access, those quick platforms, but also insight, expertise, guidance in a more personal level.
I think so. And for me, I think meeting members where they're at. Where do they want to meet us and how do they want to interact with us? What channel do they wish to engage with us on? If it's coming into a branch, that's great. If they need to have a conversation around a small table like we are today, then you create that environment wherever they're comfortable to have that conversation they need to have. So I think it will be a variety of possible different futures. I think you're going to see hybrid models that will evolve based on the business strategies of financial institutions. But bricks and mortar is expensive. It's like, don't misunderstand. We're in 80 communities with 140 branches, and it takes a lot of people to run an organization that size. But we're committed to the communities that we're serving, and we're looking for innovative ways to continue to meet their needs. And we see opportunity everywhere. We see opportunity in rural Alberta. We see opportunity in partnering more with the agricultural community. We see significant opportunity in helping small to medium businesses grow their business. And we're very excited about the future.
I can imagine there must be a real tie to some of the rural Alberta communities, where in many instances between you and a UFA or a co-op, you're the institutions. Is there a sense of obligation to continue to support those communities, and maybe it isn't make the most business sense to have a branch there, but you feel you're part of the fabric?
We are very aware of smaller communities across this province where having a financial institution in that community is part of the lifeblood that keeps the community going. We take that very seriously, and yes, like that is more than just a financial decision on whether you do business there or not. But we think there's opportunity in those communities as well. Whether it's UFA or ATB or others offering products and services, or whether it's all these online digital banks or other places that Albertans are getting their banking from, there's an opportunity to help enhance the profitability of those rural communities by bringing more business to us. And that's really what we're focused on.
Yeah. Before we get to your view of the future of Alberta, we'll close by some of the realities around interest rates and what that means. So we've seen 3 cuts now from the Bank of Canada. We saw some inflation data today that suggests that more cuts and even perhaps larger cuts instead of the 25 basis points, maybe 50 basis point cut might be warranted. What's your view on the trajectory of interest rates, and how is that affecting you and your members?
Well, I certainly believe there's a general consensus that interest rates are going to continue to come down. Some of the latest reports from our economics team would indicate upwards of 3 more rate cuts this year, and whether they're a quarter or a half point, I think as data continues to evolve, we may see more. I think that's generally good. That's generally good for business. As a financial institution, whether rates go up or go down, we're usually able to maintain pretty stable profit levels as long as things don't run up too quickly or run down too quickly. And I think we're likely to see more stability in rates coming down. That's ultimately good for Albertans. It increases affordability. But we're not in a recession right now, and primarily because of immigration. We've had significant immigration into our province, but it feels like that when we talk to our members. Things feel really hard. It feels like you can't afford anywhere near what you used to. And so I think that's just masked by more people needing to buy products and services, and that's ultimately what's kept us out of recession. So I think we're going to have to watch that very closely. It's going to take some time to work through the system, but we are starting to see interest rates drop off, not only with us, but with our competitors. And I think that'll be a positive for the housing markets across the province as well. I'm very bullish on Alberta. We've got a can-do attitude. We get things done. We have this entrepreneurial wherewithal that exists here like nowhere else in the country. So I think as the financial markets continue to stabilize, that'll just be helpful. Albertans have had it tough. We had higher savings into the pandemic, which helped us. We've certainly seen a lot of challenges over these last few periods. The cost of living is high. We're seeing it, and we're doing our very best to help our members to chart a path through that.
Yeah. Ian, let's close on your reviews. You spoke a minute ago just about being very positive about Alberta, but are we on the right track in Alberta, and what makes you optimistic about the future for the province?
I think we are on the right track. We're seeing shovels in the ground. We are seeing significant efforts to help improve investment dollars come into the province. We're seeing good cooperation across sectors, and your team has been influential in helping do that. So our future is bright. Our ability to succeed in Albertans and to do things better than other regions of the country, I think, will continue. We're seeing a strong economic focus. The price of oil has remained strong and positive. I'm very bullish on our economy, especially as we start to see this interest rate cycle become more cooperative.
Well, it's no surprise that we're long-term bullish on Alberta as well. That's why we exist, but couldn't agree more. Are there any points you want to touch on that we didn't cover in the conversation at all before we close?
I think we've covered it well, Adam. It's been great to talk to you. Really appreciate the opportunity to sit down with you today.
Well, thanks, Ian, for joining us on the podcast, and best of luck as the merger continues to take root in the company.
Thank you.
Thank you for joining us for this episode of C-Suite Unplugged, an Alberta Better podcast series. This podcast is a production of the Business Council of Alberta. You can learn more about us at businesscouncilab.com. We'd love to connect with you on social media, so give us a follow at BizCouncilAB, that's B-I-Z, Council AB, on Twitter, Facebook, and LinkedIn. If you like this episode and want to support our message of shared prosperity for all, please be sure to head over to Apple Podcasts, Spotify, or wherever else you get your podcasts to subscribe, rate the show, and give us a quick review. New episodes drop every other Tuesday. Thanks for listening, and see you next time.